welcome you to the second session, that is private limited companies, obligation and privileges, non-compliance in financial statements and audit report. I welcome CAK Gururaj Acharya sir. I request CA Pramod R. Hegde, Chairman of Bangalore Branch, to escort sir onto the dais and welcome him with the floral bouquet. A small brief about the speaker, K. Gururaj Acharya sir. K. Gururaj Acharya sir hails from the temple town of Udupi, is born and brought up in the iron city of Bellary and is now settled in the knowledge city of Bangalore. He is a qualified chartered accountant and is presently the senior partner of KG Acharya and Co. Chartered Accountants, specializing in corporate financing, corporate taxes and company law. He is a rank holder in BCom, CA and ICWA. He is a director on the board of directors of Karnataka Bank and the chairman of the audit committee of the board. He was the director on the board of directors of State Bank of Mysore. He was a member of the Karnataka State Level Audit Advisory Board. He was a co-opted member of Expert Advisory Committee and Committee on Accounting Standards for Local Bodies, ICI, New Delhi. He was a member of the Bangalore Financial Reporting Review Group, formulated under Financial Reporting Review Board of ICI, New Delhi. He has co-authored book titled Internal Financial Controls, Practical Handbook on Audit Reporting on What Can Go Wrong, published by Karnataka State Chartered Accountants Association. He is a resource person on accounting standards and standards on auditing, Companies Act 2013 and LLP, corporate finance and financial analysis, and corporate taxation and tax audits. With this brief introduction, I welcome you, sir. Over to you.
Thank you so much. What a perfect timing, huh? Exactly 12 o'clock. And I'm going to take you on to the next 1.5 hours on the topic private limited companies, obligations and privileges, and non-compliances with respect to audit. So that is the menu for the day, for the next 1.5 hours. And Pramod Hegde always wanted me to come and address Bangalore. This time, I don't know, somehow I couldn't, the timings couldn't match for me, although Lata was behind me. And I wanted one thing to be very clear, that I will come to this stage in Bangalore branch when Pramod Hegde becomes the SIRC member. So that was the coincidence. So congratulations, and officially, yesterday the Gazette has been notified. So therefore, we could put there, if you were wondering why the chairman name is missing, it's because of the code of conduct that was prescribed. So a wonderful timing. I think you timed the conference so well that at the beginning of the conference, or at least the later part of the conference, you could be officially declared as the SIRC member. Proud of you, Pramod, and wishing you all the best to do the best for the profession and best for yourself. And it's always an honor to talk in front of the great man, Mr. Girish Ahuja ji. So with your blessings, I would like to take up this particular topic, which is very favorite to me, private limited companies. Now, one of the problems with companies is that there may be auditors with only one company or with many companies. Now, the problem with one person, an auditor having only one company, is that he needs to know the entire Companies Act. He cannot say, I have only one company, so therefore I will deal only with a few sections of the Companies Act. So he needs to know the entire Companies Act. Now, entire Companies Act, all the sections, all the schedules. Now, how many sections? How many sections in the Companies Act? 470 sections and 7 schedules. So you need to know all the sections even if you are doing the audit of one company. And there's another problem with an auditor having several companies under his kitty. He may probably be overconfident that I did something in a particular company and it was right, and I apply that in this particular audit. So what has to be the criteria is not the comparison with the audit that you did earlier, rather with the standard, which is the act itself, or the accounting standards or the standards in auditing. So some amount of complacency there, and some amount of maybe inexperience in the case of an auditor who has got only one audit. So both the things are absolutely wrong, and that therefore conferences like this will probably help us, help the speaker definitely to refresh and fall in line with the requirement. So I will be taking you on through these obligations and privileges of a private limited company. Now what is a private limited company? Now what makes a private limited company private as opposed to public limited companies? I always say there are RLP. Now restricts the transfer. It restricts the transfer of shares. Restriction is not absolute, but sort of relative. Relative in the sense, as compared to a public limited company, in the case of a private limited company, the shares are restricted. The transfer of shares are restricted through the articles of association, wherein it can be told that it has to be transferred to the existing shareholders. And do the directors have an absolute right to restrict the transfer? They have to an extent, and even if the directors are saying that I'm not going to allow the transfer to happen, they should put a reason that it is not in the best interest of the company that is being restricted. So the restriction is there, not absolute, but can be developed in the articles of association. The second condition is limits the number of shareholders. So how many shareholders can be there in a private company? There are certain exclusions. You don't have to count the number of the current and the past employees within that particular 200. Now, most important, if we step aside and see how many partners can be there in a partnership firm. What is the maximum number of partners that they can be there in a partnership firm, Ravindra Koreji? 50 now. It is now enhanced to 50. Who tells this? Interestingly, Companies Act tells this, that if you have an association of more than 50, it becomes an illegal association. It becomes an illegal association. Companies Act tells that. And the third one is restricts the transfer, limits, and the third one is prohibits the issue of shares to the public. Prohibits the issue of shares to the public. So these are the three conditions which makes a private limited company that much private. Going forward, Companies Act 2013, let's see what is new and specific reference to private limited companies. Wider choice of company structures. There is an one-person company, a small company, and a dormant company. One-person company. In 1956 Act, there was no concept of one-person company. For the first time it came out, and in 2013 I was thinking India is not so restrictive that I don't have another person to be named as a shareholder. At least I have a dog for that person, to name as a shareholder. I can have somebody to get a share, call as a shareholder. I will hold 99.99%. I can get somebody else to name. What is the purpose of having a one-person company? Now we have realized that a one-person company is in some context helpful, especially, sir, in the case of doctors. They may have a one-person company and they will have probably a tax advantage. As opposed to an individual running it, one of the restriction is there that all the assets will have to be there in their name, and in case they draw anything out of the company, again dividends and taxes on that will definitely be there. But if they don't want to take the dividends, or they can anyway give remuneration. They can give remuneration and ensure that whatever is belonging to the company which gets reinvested in the company can be in the form of a one-person company. This is one of the methodologies that is being prescribed with respect to certain professionals. Small companies, so what is a small company? There are a lot of advantages. Small company necessarily means a private limited company. Small company necessarily means a company which does not have a child or a parent, which means it does not have a subsidiary or nor a holding company. So this is primary condition. Then there are certain rule-based conditions like 440. We say 440, 4 crores paid up capital and 40 crores turnover. Any one of them breaching, you cease to be a small company. So what are the advantages to a small company? We'll see a bit later on. Then there is a dormant company. So you can keep a company incorporated and keep it in coma. You can keep a company or a going concern, without any activity the last 2 years can also be kept dormant. The advantage is you may not have to comply with so many filings and requirements. Of course, board meetings are required, but as opposed to filing of AOC 4 and MGT 7s, you can probably file only one MSC form annually and be done with it at the end of the year. Whether audit is required for a dormant company? The answer is yes. The answer is yes. But there is a provision built in case you feel that a company is not active enough, you can probably call it as a dormant company by filing a form, and annually you need to file just one form instead of more than one, which we do. So these are the wider choices. Incorporation, no registration fee at all until 15 lakhs. So they have given an attraction to form a company, but I always keep telling this, the moment you form a company, they give you a number, and that number is called a SIN number. A SIN number, which means they're sufficiently warning you in advance that it is a sin to form a company. Sin to form a company. Why is it so? You will see a bit later on. Just because they're offering it as a free B, don't incorporate a company. It is like giving birth to a child. Whether or not you like it, you will have to take it to the hospital every year, get the injections done, and perform at least one happy birthday every year. So you'll have to be very clear on that particular company. There is a possibility of one thing called entrenchment. For the first time in 1956, in 2013 Act, they brought in the provisions of entrenchment. So what is entrenchment? You can build in the Articles of Association a provision harsher than the Companies Act itself. You cannot dilute the Companies Act. You can say for a special resolution to be passed, instead of 75%, it has to be approved by 100% or 90%. So you can bring in a provision harsher than the Companies Act through your articles, through the route called entrenchment. Can you do it at the beginning? Answer is yes. Can you do it in the middle? The answer is yes, subject to certain sterner conditions, because you cannot all of a sudden, just to bring in conditions, you cannot say, I will bring in, to block some group, you cannot bring in. So there are certain harsher conditions. I leave it at that. CSR, corporate social responsibility, applicable to private limited companies also. So please note, whatever is in red here is also applicable to private limited companies. CSR applicable to all private limited companies, subject to 3 conditions. Any one of these 3 conditions breaching, 5 crores, 500 crores, and 1,000 crores. 5 crores of net profit, 500 crores of net worth, 1,000 crores of turnover. Any one of them breaching, you will have to, in the immediate preceding previous year, you will have to incur in the subsequent year 2% of the average profit for the last 3 years, which we are aware of. The only issue that could come out is what is net profit, whether it is PBT or PAT. Whether it is PBT or PAT. It is profit before taxes. Profit before taxes. Now, when do I have to spend it? Obligations have been given. To spend it, I can spend it in the subsequent year or 3 years next. 3 years next. Now, if I decide to have an ongoing project, I can spend it within the 3 years next. But if I have an ongoing project, if I don't have an ongoing project, I shall, if I don't spend it by 31/3/24 or 25 as the cutoff date, you will have to deposit before 30th September in the approved funds. In the approved fund. Now, if I have an ongoing project, by 30th of April on the subsequent year, I will have to keep it in a separate bank account. Please note that throughout the Companies Act, we have so many places where a separate bank account has to be opened and kept it in that for that particular purpose. For example, dividends when it is being declared, or when the capital is being raised for the first time. When the capital is being raised on account of public issue or private placement, the separate bank account has to be opened. So much so, if the Act says that you have to open a separate bank account and you have complied with all the provisions of the capital raising, and you have not opened a bank account and you have just put it into the normal bank account, the ROC has gone to the extent of objecting to this provision to say that this is in non-compliance and you will have to return the capital mobilized, plus the penalties being levied. So please be careful. Wherever separate bank accounts are required, you need to open separate bank account by 30th of April. Now the point that comes out is, can you do it by taking the help of somebody? Can you contribute to a trust, outside trust? or should you do it on your own? Definitely you can do it with the help of a separate agency, not necessarily your own. Provisions are built in. But the point to be noted is, even those trusts, let us say 31st of March, you decided that I will not be able to do some CSR, and then I call the trust and I say, now I am giving you 2 crores, please spend this. He should have also spent it within the timelines. Your contribution to an outside agency is not enough, but what has to be ensured is that outside agency must also be, first of all, registered under, you'll have to register that trust under by filing a CSR1 with the ROC. That particular trust should have done that. And I should ensure that that trust to which I contribute also spends within the timelines permitted. There are certain other provisions, that's not the topic today, but an important point to be noted. Section 135, when it came out, provisions of penalty 7 and 8 were very, very harsh. If you don't spend the CSR, initially in 2013 Act, they said spend or report. That means you spend, if you don't spend, you report. This is one extreme. So nobody spent, they only reported. Then somewhere through the amendment, they brought in a provision to say, if you don't spend, no question of reporting, you will be not only penalized, they said you will be imprisoned. It was a provision which is subject to imprisonment. On the one extreme this side, on the other extreme that side. So they removed both the extremes. The law as it stands says that if you don't spend the CSR, you will be liable to a penalty of 200% plus 100% of your spending itself. I mean, you will also have to spend. So these are so therefore better to spend. Dividend has to be declared, and the section of dividend is very interesting, 1, 2, 3. Section 123 of the Companies Act talks about dividends, and as auditors in the audit report also we have to comment whether all these provisions of dividends have been complied with. 1956 Act also had the similar provisions, and in case their profits are not sufficient to pay out of the profits, you can pay out of reserves also. There are certain conditions. Now, in 2013 Act, they said in case the dividends are not paid within 7 years, there are unclaimed dividends, you will have to transfer the unclaimed dividend to IEPF. That was there in 1956 Act also. In 2013 Act, what was new? If somebody has not claimed for 7 years the dividends, which means the shareholder is not identified, so therefore you shall also transfer the shares to the IEPF. So that is the change which happened in 2013 Act. Not only unclaimed dividends, but also the shares have to be, the shareholder, I mean in our bank, Karnataka Bank where I'm a director, we ensure that if 7 years dividends, then we also have about 0.07% of the shareholders in the name of IEPF, because those people are not identified, so we also have transferred that, and the shareholders will now be IEPF. Private placement and preferential allotment, detailed guidelines. Be very, very careful when you are raising capital. When you are raising additional capital, comply with the provisions. As I told you, separately bank account, and there are certain time restrictions, forms to be filed. All those things will have to be properly complied. Non-compliance could lead to, apart from penalties, the refund of the money itself. Now, once you collect the capital, how do you refund? I don't know. So that better comply is the solution. Charge creation, including pledge. In 1956 Act, charge had to be created. Now also charge has to be created. What is new? Not only for immobile properties and for machineries, but also for the property which you have pledged and you have taken a money. Now the idea is, in the 1956 Act, the person who has taken knows what is the need for him to be protected further. Not only the person who has given the loan or taken the security, but also from the point of view of the world at large. The world at large should know that this property of the company has been encumbered. So also encumbered does not mean getting if I have a car now, earlier car, mortgage of course is required. The hypothecation for car is required. Hypothecation of car with the registrar, the sub-registrar, vehicle registrar, RTO, is not considered to be the registration that we are talking of. Even if there is a car loan, which is taken by a company, the company should, apart from filing the encumbrance with the RTO in the RC book, should also file a CHG1 with the ROC. So these are the changes which happened. And as auditors, we have got an obligation. Has all the CHG1s and CHG4s. 4 is with respect to satisfaction of charge. Satisfaction of charge, has it all happened? All of you must be aware that there are timelines within which the charges can be created. Within 30 days, 30 to 60 days, 60 to 180 days with ad valorem. Up to 30 days, normal filing fees, 30 to 60 days, additional filing fee, 60 to 120 days. It is ad valorem fees, and beyond that you cannot file. You cannot file, you will have to again create a mortgage. So the impact of not creating a charge with the sub-registrar means that the person who is having the charge, I would have given my property documents to the bank, but if the charge is not created, it means that in the event of a liquidation, I, the banker, will be considered as an unsecured banker. He will not be considered as a secured banker to that extent. Now, obligation for companies to establish internal financial controls, always required. Internal controls are absolutely required. What more is auditors to comment. For the first time in 2013 Act, the auditors have to comment with respect to a separate audit report has to be given with respect to internal financial controls. Now, what is internal financial control? All these days, my good friend Mr. Sunil from Ernst & Young, sir, thanks for being with me. You are always commenting in the audit report that the financials are true and fair. The financials are true and fair, which means the financials which I am signing off with respect to the past are true and fair. When I am talking about internal financial controls, I am not talking about just the financial statements are true and fair with respect to the activity. I also say that the controls are good enough. The controls are effectively used. The controls are effective for the future. The future is also sort of, in a way, assured. The controls are good. I mean, I'm not saying that the future is going to be as good, but I'm saying that the controls are good because of which the future is sort of assured. When I give the classic example that if I am going from here to Chennai in 6 hours, I'm going from here to Chennai in 6 hours, and then Pramod is also there, who takes his car and he's also reaching Chennai in 4 hours. Whose car would you like to go? I had my favorite guru called Dr. Sheshadri. His son is here. He's a chartered accountant. I owe all my talking skills to Dr. Sheshadri. Okay? Can you tell me whose car would you like to go? My car or Pramod's car? Pramod's car. Now, this is what I used to tell. Pramod is telling thanks. Yeah, I know why you'll prefer my car, because you have heard me talking before. Maybe, I'll just tell you, and maybe, with age, it also has an age factor. Now, what happens is, all these times what I told you is, I am going in 6 hours, Pramod is going in 4 hours. This is the standard thing. In the last 10 times I have gone in 6 hours, he has gone in 4 hours, so now you prefer to go with Pramod. I did not tell you one thing, that Pramod's car does not have brakes. Now, if I tell you that Pramod's car did not have brakes, whose car would you like to go? Now you will shift, isn't it? Now, this is what we are going to do in the question of IFC reporting. I am saying that not only the financial statements are true and fair, not only Acharya is reaching in 6 hours and Pramod is reaching in 4 hours, in Pramod's financial statements, I will say there is a significant or a material weakness in the car or in the company. Now, I am not only saying that the brakes are not there, is one option. The other thing is the controls are there, but not proper. Controls, if the brake is behind his back, or it could be a situation where the brake is there, but is not effectively used. Pramod has actually sat in a Padmasana and is driving the car. So, what I'm going to finally say in an internal financial control is not only the reflection of the past, but also the possibility of a occurrence of a fraud or an error or possibility of a misstatement in the financial statement is what I am going to tell in the IFC report. Significant deficiencies and material weakness or material deficiencies. Significant deficiencies have to be brought to the notice of the management. Material weakness or material deficiencies is what has to be reported in a separate report, which could be within the main audit report, or mostly like what we do, it could be in the form of an annexure, just like CARO. Revision of financial statements possible, but avoid. Okay? So do it right the first time. But in case you find out some mistake, you have an option built in the Finance Act, the Companies Act itself, to revise the financial statement. Rotation of auditors applicable to private limited companies, yes or no? Because it is in red. Please note rotation. When is it applicable for a private limited companies? All private limited companies? No, class private limited companies. Who is a class private limited company? With a 50 crores borrowing. If he has a borrowing from banks or financial institution to the extent of 50 crores, or the company has a paid up capital of more than 50 crores, then you shall, within a period of 5 years, change the proprietor, or if it is a partnership firm auditor, you will have to keep him one term for 5 years and second term for 5 years and rotate him out after 2 years. Now what is a term? What the Companies Act tells is you have to rotate him after 2 terms. You have to rotate him after 2 terms. Now if you are appointing the auditor, Srinivasan sir, my partner in FRRG, of course Sunil is also a member of the FRRG, and what we do in Financial Reporting Review Group is, let me tell you, that we look into the financial statement like an examiner. Like an examiner. There is something called the Taxation Audit Quality Review Board also. So we look into the financial statement like an examiner, which is already signed by the auditor. No? Then we look into it as a group of 4 people. There is one technical reviewer who was already looked into and pointed out a lot of mistakes. He is the chief examiner. Then it comes to the group, which is again will examine whether what is the TR said is right. TR is the technical reviewer, whether what he said is right. Right, matlab, he would have pointed out the mistakes of the financial statement which is already audited. And the group will then sit in judgment to see what the TR said is right. In case he is not correct, then say the company is right or the auditor is right. So that is what happens. So in the case of rotation of auditor, what we do is, if the auditor is appointed for, let us say, 2 years, and then he is appointed for another 2 years, and rotation is a must, then unfortunately after 4 years he has to be rotated. What I mean is that 2 years can be a term. If he is appointed for 1 year, can the company appoint for 1 year when the Act says he has to be appointed for 5 years? The ROC himself said it is possible. Okay, there could be difference of opinion, but yes, the answer is the companies have been appointing, ROCs have been accepting it, so possible. But the problem is if you are appointed for 1 year, that will become a term in itself. So be careful about that. Auditors to attend general meetings, as a right or as a duty? As a right or as a duty? I thought it was a right, but it is also a duty. The duty of the auditor to attend the general body meeting, because he can then listen to the deliberations that are happening there, and maybe he can change the course. Although auditor is not supposed to talk in the AGM, he will be a silent spectator to find out whether his scope needs to be changed or whatever reason. The reasons have not been told, but in case the auditor is not able to go, he can depute anyone who could be appointed as an auditor to attend on his behalf, or take a leave of absence from the company. Take a leave of absence on the company. So that's a point. It's not only a right, but a duty for the auditor to attend. Internal audits made mandatory. Section 138 makes it mandatory for certain class, including private limited companies, to have a internal audit system. Otherwise, the statutory auditor comments that there is no proper internal audit in CARO. Women director applicable to class public limited companies only, not to private limited companies. Related party transactions defined clearly. Also, related party transactions, we look from AS 18 for disclosures. In the Companies Act, there are do's and don'ts with respect to compliances. So very stringent compliances have to be complied with including for a private limited company. NCLT instead of Company Law Board and Bureau of Industrial and Financial Restructuring, class action suits. When a company against a company or against the auditor, a group who are affected can make a case against the company or against the auditor. So that has been built in for the first time in Companies Act 2013. The last point, 16th point, appointment of key managerial personnel, and I have brought in key managerial personnel means the managing director, the CFO, the company secretary. Company secretary. Please note, a company secretary is also a key managerial personnel, and his appointment is a must, even in the case of a private limited company, if and only if the private limited company has a paid up capital of more than 10 crores. If the company's paid up capital is more than 10 crores, the company has not appointed the key company secretary, there can be huge fines. Huge fines. Now, what will the company's full-time company secretary do in a company just because the company has a paid up capital and it is still not started the activity? God knows. You are supposed to have him. So please take care of that. Yes, sir. Now, class action suits by shareholders or depositors for corporate disputes. Now, if in the case of Satyam, I'm just taking an example, what I could have done, the shareholders put together, instead of me levying the claim against the company as a one A and company, I could, as a group of shareholders, go and as a class who are affected, we can collectively, not only against the company, but against the auditors or against the directors or against any other person. The affected people can form a group and levy a case. Probably the idea is to split the fee, split the bill. Yeah. Yeah. Same auditor. Yes, yes. We are talking of the same auditor. No other person is allowed. As far as the act is concerned, no other person. I would put it like that. Okay. The provisions that are built up here is the same auditor. Okay. Yeah. Yeah. There is no exemption. You have to seek an exemption. As I told you, you have to write, the company can exempt. The section says that you can appoint another person, your partner or your junior, who can be appointed as an auditor by himself. Why they use the word who can be appointed as an auditor by himself means you cannot send an internal auditor there. He should be independent enough to represent. So you can either send him or the company can exempt. Now when they say who is the company, whatever acts can be done by the company can be done through the directors. So therefore the director should give a leave of absence.
Okay, if the company has not informed the AGM date to us, what happens?
Then it is not your responsibility.
Yes.
Then it is not, you cannot go to the company every day. In that sense, I would put it that way.
So we should have got the invitation.
Ideally in such companies, you should not associate.
Yeah.
I would say that. Right? Yeah. Correct. Correct.
There is a delay in one day. Is that counted as default?
I wouldn't say that. This is a question, in so many cases, we have come to know that there are 185 is not applicable to private limited companies subject to certain conditions. One of the conditions is the company should have to have defaulted in filing its financial statements. Now we are of the opinion, we have also taken the ROC's view on this, to say that if the company has rectified the defect, it is not anymore a defect. By paying an additional filing fee, if you have rectified it, it is not anymore a defect. Sunil sir? Yeah. Yeah.
From IFC, or it has to go through the private company exemption route to qualify?
Good question. I think I have written there. IFC comment, audit comment. Please understand that IFC is exempt for private limited companies does not mean that the company should not have IFC. Company should have IFC. The reporting of IFC is exempt for small companies. And once you are a small company, there is no need for the auditor to comment on IFC separately. Also, the additional condition is 25 crores and 50 crores. 25 crores borrowing and 50 crores turnover. So 25 crores borrowing and 50 crores turnover, if both of them, if any one of them breaches also, if any one of them is below, you still don't have to file IFC. This is one funny situation. Very rare situation we have found in Companies Act where both of them should breach for the auditor to comment. Okay? And if you are a small company, you don't have to look into that at all. That's the point, long and short of it.
So
even
the
same for
exemptions
Caro.
need not be
Even for
discussed.
Caro, once you are a small company, you don't have to give a Caro. Even if you are a small company, you don't have to test your 25 crores, 50 crores and all. As simple as that. Okay? So allow me to go forward and then we'll again take some questions at the station. So apart from 2013, we also had 4 amendments in the Companies Act. So we'll see what are the major amendments. One of them is minimum paid up capital is dropped. So a company can now have, in fact, this is how it started. Private limited company means a company having a minimum paid up share capital of 1 lakh or such higher paid up capital, which got deleted, I think in 2017. So minimum paid up capital is dropped. Common seal is made optional. So you don't have to have any more the hammer with you. Please note, I'm not putting it as a standard condition that you don't have to have a hammer, the common seal. If you want to remove the common seal for an existing company, you should amend your articles. In your articles, it's already built in that, wherever the company has to sign, it is through the common seal. That has to be amended and then you can throw it to the dustbin. Till such time, you have to worship it like God. In the new articles of association, you can ensure that you can remove that particular provision. So that is what is told. Fraud reporting by the auditor to central government was always required. Through the amendment, what it said is only if it is more than 1 crore. Up to 1 crore, you can report it to the company, either the audit committee if it is there, or else to the board. Ratification of auditor's appointment every year has been scrapped. Appointment of auditors for 5 years, and what they said is every year it has to be ratified. The idea of appointing the auditor for 5 years is at least for 4 years he will be independent. Sunil sir, sorry for making such a statement, but the point I am saying is it is like that, and then every year you have to again go means maybe that was looking not good, so therefore they have removed the ratification. Auditor to report on adequacy and operating effectiveness of IFC with respect to financial statements. The reporting of IFC was always there since 2013. Our institute in the guidance note, they went on to say IFC means internal financial controls, not necessarily regarding non-financial aspect, but only with respect to financial matters. Our institute in the guidance note, they are already told what was there in the guidance note has been amended to say internal financial control with respect to IF financial statement instead of internal financial control systems. Rationalization of provisions related to section 185. Now, 2 things are very important in any company. Taking money and giving money. Please look at this. Taking money, you cannot take it from anybody. You cannot take it from anybody. There are restrictions with respect to accepting deposits by a company. Now, what is a deposit? Now, the definition of deposit in Companies Act is any money collected by the company will be deposit. Any money collected by the company will be deposit unless it falls into any one of the 18 exempted categories. Unless it falls into any one of the 18 exempted categories. Or you can collect money in the name of deposit. You will say that this is deposit that I am collecting and I can collect it. But if you are saying that I am collecting in the name of deposits, you have to comply with certain conditions. You have to comply with conditions. Now, please look at this. I am giving certain colors here. In the morning also, I think MP we talked about 2 colors. The IFRS comes with the red color, and the SSB, the Sustainability Reporting Standards, comes out with blue. I wanted to tell him why not green. It's all about green energy and green. Why is it in blue? Anyway, having said that, So here I am using a different color in the sense, if the company has collected money which falls into any one of the 18 exempted categories, I will show you what the 18 exempted categories are. I will give you an example. The 18 exempt, the money, a company can collect money from bank in the form of a loan from a bank, public financial institutions, no problem, green. It takes from abroad, any money taken from outside India subject to compliance of FEMA is green. Like that, they have given 18, any money taken by a company from another company. Money taken from a company by another company, what we call technically as intercorporate deposits. The word in the act, there is no word called intercorporate deposits. It only says any money collected by the company will be deposit subject except for the following. That means any money collected from another company is not a deposit. Like that, they have given 18 exempted categories. Now this is, I call it as green deposits. I call it as green. Then we will have a situation where the company has royally collected deposits in the name of deposits. You would be seeing some company saying, we are raising deposits, so please come and subscribe. So this is applicable only for eligible public limited companies. The word used in the act is eligible public limited companies. Can private limited companies also raise deposits? Not from the public, but from the existing members they can raise subject to certain conditions. So I call that which is collected deposits as such as blue deposits. Now if it is neither green nor blue, it will become red deposit. That means it will become a violation of the deposit rules, which will be attracting a penalty of 2 crores to 10 crores. What you would have collected is only 20 lakhs. There is no such thing to say that restricted to the amount of deposit collected. So the deposits are, the violation of the deposit rules are so harsh that the penalties are very, very high. So two things I wanted to tell you. When the company is collecting money, it has to be careful. And when the company is giving money, giving loans, also it has to be very, very careful. Now, when it is taking money, can it take from the members? I told you subject to certain conditions, we'll park it. Can it take it from directors? Can the company take loans from the directors? Answer is a big yes, because loans from directors fall under the green deposits, exempted category. Can the companies take deposits from, monies from, because please understand, company will not know, I am not taking deposits, sir, I am only taking money. Taking money itself is a deposit. Can the company take money from a relative of a director? Can the company take money from a relative of a director? Yes, for private limited companies only. For private limited companies only, the company can take deposits or money from directors and relatives of directors. For public limited company, it is not possible. Now, who is a relative? So this is I wanted you to hear this. Who is my relative? Income tax, relative, Aju Baju, Aage Piche, Upar Niche. Aju Baju, husband and wife, Aage Piche, brother and sister, Upar Niche, lineally ascendant and lineally descendant. So this is the definition of relatives under section 2 of the Income Tax Act. Now under Companies Act, the definition of relative is Aju Baju, Aage Piche, just upar, just niche. Just upar, just niche. That means my grandfather and grandmother and grandchildren are not my relatives. To compensate that, they have brought in son's wife and daughter's husband. वो कहाँ है sir? नहीं, not in section 2. No, वो section 57 में. I'm talking of section 2. Section 2. Section 2 definition is आजू बाजू आगे पीछे ऊपर नीचे. I will come to section 57 a bit later on. So section 56, yeah, section 56, sorry. So when we talk about relatives as far as Companies Act is concerned, आजू बाजू, आगे पीछे, just ऊपर, just नीचे, and because my grandfather and grandchildren are not related, they have brought in the concept of son's wife. Who is a son's wife? Daughter in company law. Daughter's husband. Who is the daughter's husband? Son in company law. So I have to introduce, he is my son and he is my son as per company law. So that is the definition. For the purpose of relatives, point I'm trying to say, this definition of relatives can be working against you, in some places, can be working for you in some places. Working for you because as a shareholder, auditor of a company, I should not own any shares in the company, right? I should not own any shares in the company if I am the auditor. My relative should not own more than 1 lakh, 5 lakh. No, there is some restriction, 1 lakh or 5 lakh. I think, anyway, we have ensured that none of our relatives are owning any shares. But the point is, if my grandfather is holding shares in the company, it is good for me. That means I can still be an auditor of the company. I can still be the auditor of the company. But if I have to take loans from my grandfather where I am a director, I cannot take. So this is how the relationship will go. Okay? So I told you about deposits. Now about loans. Look at this. The company can take money from directors or relatives of directors in private limited companies, but when it is giving money to the directors, there is a ban. That is section 185. Section 185 says a company cannot give loans, not only loans, LGS, loans, guarantees, securities, investments, to any of the directors. This was 2013. Then they sort of diluted it. So they made it into directors, partnership firms in which the directors are interested, and companies in which the directors are interested. Now look at this. When it comes to directors, loans cannot be given. Except they brought in 2 exemptions. One is, if the director happens to be a whole-time director as an employee, and along with the other employees, like any other employee, if the company has a rule that all employees are eligible for getting 6 months advance as a loan or whatever, then the managing director also can get, the whole-time directors can also be eligible like any other employee. Or it should be a scheme approved by the members through a special resolution. Then it can be given. Am I clear? For individuals. In a firm in which, a partnership firm in which the directors are interested, the partnership firms in which the directors are interested, blanket ban, cannot give. In the case of a company in which the directors are interested, they have brought in certain relaxations. They said, first of all, if it is a company in which the director is interested, this company, if it has to give loan, guarantee or security, it should be through a special resolution. Plus this company should use that particular money for its principal business. It cannot in turn give the loans to somebody. So that is the condition that they have said. However, they also have relaxed these conditions further to say, if the company happens to be a wholly owned subsidiary of this company, then nothing of the above will be applicable. That means I can give. If this company is a subsidiary of this company, then I can give security or guarantee to this company without special resolution and other conditions. So this is 185. So 185 has been relaxed over a period of time through the amendments. So we talked about every company, okay, this is important. Every company making public offer and such other prescribed class of companies shall issue securities only in demat account. Is it applicable to private limited companies? The answer is an yes. Yes, if you are not small. For small companies, shares can still be in the form of material. For a non-small private limited company, shares has to be in demat form. What was the last date? 30th September 2024. Have all of the non-small companies dematerialized it? What is the process of dematerialization? Please understand, company's obligation and shareholders' obligation. Company is under an obligation to have a facility for transacting in demat form. That means I, as a company, should have an ISIN code. If I get that, that means I have done my job as a company. And whenever the shares are transferred, it has to be in the form of demat. I cannot tell my shareholders that you shall definitely dematerialize all your shares. Okay? So there are certain rules of dematerialization, but all that I am going to tell you is dematerialization is also applicable for non-small private limited companies. We talked about registration of charges, only 120 days allowed to register charges instead of 300 days. Every company, point number 9, SBO, significant beneficial owner. So every company, it is the obligation of the company to find out who the individual shareholder is. What I mean is, if the company is having shareholder A and B, A holding 50%, B holding 50%, no problem. They are the significant beneficial owners. If company A may, B private limited is holding 90% and A firm is holding 10%, A partnership firm is holding 10%, it becomes the obligation of this company to find out who the individual shareholder of A company and B firm is, to find out whether they are significant. Significant means more than 10% either individually or collectively. There are certain rules, but it becomes my obligation to find out who the significant beneficial owner is in my company. So I have to find out who is that. This is to find out, pierce the corporate wheel. We have to pierce the corporate and find out who is my owner. Maybe I will know. Not only I should know, but the world at large should know. How will the world at large know? When I file this particular Ben 2 form with the ROC, I will come to know in my company, Mr. So-and-so Tuglak or so-and-so Yadav is my shareholder. Maybe if he were to be a shareholder, I would not have invested. Or for whatever purpose, I should know who is that significant beneficial owner beyond the company. Point number 10 is still not applicable, so I will not talk about it. This has been my favorite slide. So according to the Hindu scriptures, sir, Girish sir, we traveled to Rameshwaram together, and I had the privilege of having the 16 wells, I suppose. We bathed together and we took a dip in the Indian Ocean together. So according to the Hindu tradition, we had 16 Shodasha Samskara. It starts with Garbhadana. I think you can understand it. Pumsavana, to ensure the good health of the fetus. Simanto Nayana, what we call baby showers, to getting the blessings of everybody for the mind being formed in the 5th to 8th month. Jatakarma, Jataka writing the horoscope. Namakarana, naming ceremony on the 11th day. Nishkramana, baby's day out, first day out. Annaprashana, the baby's first dine. Then Karna Vedana, the piercing of the ear. Chudakarna, the haircut, the first haircut. Vidyaramba, Upanayana, the thread ceremony where you start your education. Samavartana, that means it's actually the graduation ceremony where you graduate and come out of your then the Vivaha, the marriage. The Pancha Mahayagna, from the marriage till you reach the old age, you will have to do a lot of good rituals, the Pancha Mahayagna. And then you have the Vanaprastha, that means ready to go, the amber light, and Antyeshti, the red light. So why am I talking about all this? Is just there are like 16 rituals or Shodasa Samskara. For every company, you will have to have Shodasa Samskara. You will have to have Shodasa Samskara whether you like it or not. Whether you like it or not, you have to file so many forms, default of which could mean you will be filing, in LLPs, we have seen this in LLPs, every day default, now for the ROC, AOC 4 and MGT 7 also, every day default 100 rupees. We had a situation where the LLP does not have anything. He has not filed his for LLP 8 and 11 for the last 3 years. We calculated and said 70,000 rupees. He said 70,000 rupees. He took 1 week and he came back and gave us 70,000 rupees. Now he said 70,700. So every day the meter runs, whether or not you like it. So what are the various forms that you have to file? Spice and Agile for incorporation, INC 20A. Immediately after the company is incorporated, you cannot start your activity. You have to first you have to first open a bank account, and you have to put the initial promised share capital into that account. and then file a INC 20A to say that now I am ready for business. Then DPT 3, we talked about green deposit, blue deposit, and red deposit. Now whenever you are collecting money, either it could be green or blue or red, you will have to file a DPT 3 every year, which means every company which has taken money has to file. The only exception I say, DPT 3 need not be filed by, including a private limited company, DPT 3 has to be filed. Every company has to file AOC 4, MGT 7, DIR 3 KYC, DPT 3. Now the only exception when DPT 3 need not be filed if the company has share capital and sundry creditors. If it has got anything else, it may have to file a form. Advances, look at this, advance from customer, is it a deposit? Advance received from my customer, is it a deposit? It says any money collected, including advances, is a deposit, However, up to 1 year from the time you have received, it can be under green. The only other exception is, look at this, is if it is in relation to a long-term capital project. If it is a long-term capital project, it can be beyond 1 year. It can be beyond 1 year. So DPT 3 has to be filed, and DPT 3 has to be certified by a chartered accountant. If it is on account of other than green. If it is for green, that means exempted deposit, DPT 3 company only has to certify. If it is on account of blue or on account of red, it has to be certified by an auditor also. MSMEs. Now, this is interesting. Section 43BH. 43BH, any dues to SMEs. I have to always use the word small and medium, small and micro and small industries, enterprises. What is a micro and small enterprises? Up to 50 crores turnover and 10 crores investment in return on value in plant and machinery. Return on value in income tax for plant and machinery, you will become a micro and small. 50 crores turnover, 10 crores WDV in plant and machinery. 50 crores turnover does not include exports. This is one small change. So then you are classified as a MSE, micro and small enterprise. Now if the company, first of all, there is a disclosure requirement in the balance sheet to say dues to any payable dues to micro and small enterprises and others. On the face of the balance sheet I have to show. Inside I have to show a big schedule itself. I will show you what the schedule is. Now some of the companies say dues to MSME. If you say dues to micro, small and medium enterprise, it becomes a mistake for FRRB. It becomes a mistake for them because I should not include medium enterprises in that. Although the Act talks about micro, small and medium enterprises, the benefits that are given from the Act is only to micro and small enterprises, both for disclosure purposes, for the purpose of payment and for the purpose of disallowance under Income Tax Act. It's only micro and small enterprises. Now what is that form you have to file? Every company has to file this form twice a year. September and March, within 1 month, you have to file an MSME 1 form to say, are there any outstanding dues more than 45 days in my balance sheet? I mean, as on 30th September and 31st of March. In fact, I think some 3-4 months back, some of you who are dealing with the companies will know that the form got amended to say not only outstanding, but also already paid. If it was paid beyond 45 days, should be shown under MSME. Now we did not take this particular, we have not started filing this yet because the form has got changed, sir. The rule is still not changed. The rule says only outstanding beyond 45 days have to be filed. So we are following the form and following the rule and not the form. To that extent, if it is there only we are filing. If there are any outstanding dues more than 45 days, then only we are filing, are required to file MSME. The only form, please understand, the only form in the entire Shodasa Samskara or more than Shodasa Samskara which does not need a filing fee is this. MSME form does not require a filing fee. CHG 1 and 4, charge documents and creation, we talked about it. ADT 1, appointment of auditors. Appointment of auditors has to be filed by the company. Resignation of auditors by the auditors. One is within 15 days and one is within 30 days. AOC 4, financial statements, MGT 7, annual return, PAS 3, return of allotment, SH 7, increase in authorized share capital, MGT 14, MGT 14. In fact, for every resolution that happens, MGT 14 has to be filed. However, for a private limited company, they have relaxed it through the Amendment Act. Now the only resolution, board resolution, which has to be filed through MGT 14 is any change in the managing director. MD's appointment or terms, if there is a change, every private limited company shall file a MGT 14. Then change in directors by company. Change of, earlier resignation of companies or appointment of companies, DIR 12. DIR 11, resignation of a director. Earlier, the company had to file one DIR 12 and the resigning director had to file one DIR 11. Now they said the resigning director has to file as an option. Now when will the resigning director take up this option? When will the resigning director take up this option? Only if the company is not filed, because he wants to put an end to his liability. So that is an option. DIR 11 is an option, not a compulsion. Then MR1, return of appointment of MD and whole-time director. INC 22, change of registered office. BEN 2, we talked about significant beneficial owner. Dematerialization, we have spoken. Look at this, penalty for private limited companies. Any questions so far? Yes, please. Can you give the mic? Yeah, please go ahead, please go ahead.
It's not working. Hello?
Yeah, go ahead.
If a promoter of a company,
Yeah.
say is going to the bank and creating charge on assets of a
Yeah, I got
company.
your question. Your question is, if the promoter is securing his personal assets, right?
No, of the companies.
Correct.
Of the companies.
Of the company, then it is a
Yes.
company's asset.
Yeah, but the difference is, say the promoter has two companies.
Okay.
In the first company has got certain assets,
Okay.
and now he is giving the first company's assets on lien to second company.
Then it has
So
to
my
be charged.
question is, yeah, so
It has
it
to be
has
charged.
the
Yes.
first company also has to file the charge, right?
First company only has to charge.
Yeah.
Whose asset is encumbered, that company has to file the charge. Because that is what is you are telling everybody. You are not worried about the loan that is being taken. You are informing everybody that this asset will not be available to you in general. It is available to a particular person.
So in your experience, since you are also on board of some of the banks, if such kind of security is mandated, you would definitely ask for the charge document as a banker?
Yes, yes, of course.
Okay.
In fact, now that's a very interesting point. If the company does not file a CHG1, the rules say the banker can also file. He can go beyond. Without the company's DSC, I can as a banker file.
But will I be able to, for example, if I am the auditor, if I want to check if all the liens are there or not, and if I request
You can, no, you can do
for that company, I can still see, even if banker is filing it, I can still see it.
You can do the search.
Yeah.
You can do the search. Yeah. One more question, please. Yeah, go ahead. No, Ali, hindugade. Let him come.
So most of the companies has not filed PAS1, not obtained ISIN by September. So what's the consequence of
You are
not?
talking PS1, is it?
No, sorry, ISIN has not been obtained by September.
What has
Many
not
of
been
the
obtained? What has?
ISIN.
ISIN. Okay, ISIN. Okay, okay. Lot of our companies. We are in good company. Don't worry. There are only two RBIs. Reserve Bank of India equivalent for this is CDSL and NSDL. Only these two people. And there are an army. Please sit down unless you have another question. So there are armies of companies which have filed, which they are not able to take the load. They are doing one by one. So I have taken a very clear stand. I have informed it to the MCO also that we have filed, and it is their obligation. We have written 3-4 reminders to them that we have filed, and by 30th September, give us our ISN. If they have not given it, not my mistake. But the only problem I am facing here is, I think, future when I am allotting shares, any such private intending to make an offer for any issue of securities or buyback after 30th September shall ensure that the entire holding of securities of its promoters, directors, key managerial persons are dematerialized before making such offer. I told you that I cannot force all my shareholders to dematerialize, but I as a company means nothing but promoters, directors and KMP. At least their shares shall be compulsorily dematerialized. This is where we are having a problem. So on these companies, if the camera is not there, I will tell you, I am using my influence to get it done on a fast track basis. Okay, that's how it is.
And,
otherwise, my obligation ends with applying, and I cannot get the ISIN I cannot allot ISIN. Whoever has to allot ISIN, I have done my job.
Now, in case the company missed to apply also, then what is the consequence?
Apply
because
it
I
now.
don't see the...
Apply it now.
I mean, there is no specific consequence mentioned as of now, I believe.
I don't know, yes, but there is a general consequence.
Yeah,
10,000
which
rupees
is-
penalty is there, so that may be applicable.
Okay.
So whoever has not applied, or whichever companies have not applied it now at least. You may get it in 3-4 years.
Yeah. My second question, in case of bend to firm and company, so does the firm include proprietary firm also?
Proprietorship concern, I would always say there is no difference between a proprietorship concern and an individual for all purposes.
Correct.
It's all an individual. So proprietorship concern and the individual has the same PAN. So therefore, no.
No. Okay.
So I would always say that then in such context, let us say Mr. Bulla Reddy, proprietor, Reddy Brothers, or something like that, Reddy and Concern. So then you should have Bulla Reddy as the shareholder and not Reddy and company as the shareholder.
The firm as the shareholder. And my
I don't use the word firm. Firm means partnership firm generally.
Yeah, okay.
Concern, partnership, proprietorship concern.
Okay.
Yeah.
And my third question is, in case the loan is taken from the director and the director is also a shareholder.
Yeah.
So
He will
then
primarily be a director and not a shareholder.
shareholder.
Yes.
And-
Fourth question means another bill will come to you.
Okay, thank you.
No problem. Go ahead. Yes. Illi kudi un mic. See, law does not recognize the husband and wife as a company. I mean, in that sense, they are shareholders. Yeah.
So let's say the director is depositing money into the company on a regular basis throughout the year, and they are not able to file DPT3 on time, and this goes ahead. During the audit, we identify there is an increase of loan from directors. So in this case, if there is a default from filing DPT3, do they have to, still file it after the annual return, or?
Yes, DPT3 has to be filed. I think I gave the date. DPT3, unfortunately, by 30th June.
Yeah.
30th June. Every year, invariably, in all our offices, we are filing it along with the balance sheet by paying an additional filing fee. We made a request also because we will come to know the clarity only at the time of finalizing the balance sheet.
Correct.
So please give us time till balance sheet. They say from their point of view, the company knows.
Okay.
So-
Company has to file it.
That's it.
So, and regarding MSME, so since there is no filing fee, again, can we do it at the time of the audit?
I would always say yes.
Okay.
If it is not done, definitely do it.
Okay.
There I told you two things. One is outstanding beyond 45 days. Outstanding beyond 45 days. But there is also paid beyond 45 days also is there in the form.
Okay.
But the rule is telling only outstanding beyond 45 days. So if it is all paid within 45 days, no. But outstanding is there more than 45 days, better to file delayed rather than not filing at all.
Does it have a late fee?
I don't think so.
Fine.
Because it will be 4 times 0.
In case of IFC,
Yes.
the first year of application, where the auditor observes that there is a violation or there is a
Sunil sir, this
deviation.
question is to you.
So, but the same the deviation had happened in the last year also, where it was not applicable. Now,
No,
does
what was
au-
not applicable?
The IFC was not applicable.
IFC was not applicable.
And the auditor was same auditor.
Okay.
Now, does he get any liability? Or the
No, when he is not
impeachment from-
required to report, let us be very clear, reporting is one thing, having IFC is one thing. Whether the not having IFC has an impact on the true and fair ness has to be seen.
Yes.
Like what I said, he has been reaching 4 hours all the while. True and fair is no problem. Control weakness, I will only inform the board and leave it at that. In the next year, when I have an obligation to report, then I will see whether it is a material weakness. Then I will definitely report in my audit report. If it is significant, I mean significant means not material. That's how the word used in the IFC standards. So there they said that you have to report it to those charged with governance.
No, that it is a material case.
Then you will have to definitely bring it to
has
your
to be
audit.
reported. It will be reported in the first year.
Now
of
your
audit.
question is whether it will have an impact on the previous years.
Yes.
So your view. Yeah.
So I think if you look at, I think the question is that last year it was not applicable. Now, if last year it was a material and it had a true and fair view impact, and if there was nothing done about it, then there was an obligation for that, but it's for last year. As far as this year is concerned,
I think this
if
year
it
he is
is
going to
a-
report, but his
yeah.
question is, and the fear that he has is last year I did not report. Now if I report this now, will I be penalized for the last year also?
yeah, but but what happens in case of IFC, you have to ultimately see whether it has got an impact on the
True and fairness of the financial
of the
statement.
financial statement.
I stand by what I said. If the true and fairness is not affected in spite of the material weakness being persistent, in year 1, no, see, agreed. Then I think you should, there was no need for you to test. See, there was no, I mean,
Will I be covered?
there is a need for testing in general, need for testing in particular.
Correct.
Now, in the second year, there is a need for testing in particular. In the first year, there was a need for testing in general. So it missed your sample or whatever.
No, correct, but will I be from the institute angle, whether I will be proceeded against by the institute for
I don't
negligence
think
of
so.
my duty.
I don't think so.
There was no reporting requirement on IFC.
I don't think so.
last.
As long as the true and fairness is not affected, you would not be. I would say, or I cannot say for the institute, at least I will support you in the institute for that matter.
True and fair is only a perspective which had happened. No, but had I looked into this aspect, I would have even qualified last year.
See, in hindsight, you can say so many things. I think you should see it in foresight and at that point in time, not in hindsight.
No, but I think Mr.
Yes,
Acharya, that
Yes, I'll go with my good friend from Dr. Suresh's office, the partner. Yep, please.
In case of these private limited companies which are required to get the DMAT done, in case of incorporation of such companies, how do we go ahead with it?
No, you incorporate it and immediately apply for ISI.
After all
Yes.
these?
You cannot issue shares in DMAT. First, a company should be there, like, every company should have a bank account. You cannot have a bank account before forming the companies. Like that. ISIN is like a bank account. Form the company and then have the ISIN. Yes. Now, if the promoter is pledging his own property, the company does not have to do anything. No charge creation.
No need of
No charge.
create.
I'm telling you that the charge has to be created with respect to the assets in the balance sheet of the company. If it is beyond, the company is safe.
Okay.
I'm saying the lender is safe, the banker the banker is safe, CHG1 is not required.
Oh.
Because it is his security which is being pledged or mortgaged or whatever. Okay?
Thank you.
ಎರಡು mic ಇಟ್ಕೊಳ್ಳಿ ಇನ್ನೊಬ್ರು next last ಅಲ್ಲಿ ಇದ್ದಾರೆ. Okay.
Okay. The company has fixed assets, land and building. Now it has taken a loan from, it's a soft loan where the interest is not payable or something. And this specific asset is not mentioned in CAG1, but it says all the assets which are acquired through the loan. Now the company plans to sell off this asset, but the loan still exists.
So you have a floating charge on all the assets. That's how it is said. It's floating charge.
It specifically says any assets acquired by taking this loan, but this asset was existing from the day one of the company, not acquired through the loan though.
Then you will have to file CHG1. You don't have a choice.
No, CAG, can it sell this asset because there is no specific encumbrance
Sell
on
this
this
asset with the consent of the person who has the charge.
Okay, then no.
Otherwise, you become what is known as willful defaulter. Please understand. We have a concept of willful defaulter and then fraud in the banks. So the bank may call the company as a willful defaulter. Please don't do, whenever an asset is charged to the bank, the company, it is not the company's asset anymore. It is the asset of the bank. So without the permission of the bank, you cannot sell.
Asset doesn't have a specific charge.
No problem. It could be floating charge, like stocks. Whenever cash credit limits or overdraft limits are given by the bank, it is on the current assets, not on any specific asset. It will be floating. Okay. So that's the answer. Yes, please.
Sir,
Last question before I go to the complete my session. Yeah.
Sir, about the ISIN, many companies have not obtained the ISIN, but many startups, they need the investments for taking the business forward. So in this scenario, what happens to the investor's perspective?
I have written a letter. Institute should write a letter. Collectively, KSCA should write a letter. If there is any representation from KSCA, or the institute itself should take it up. Write to Company Secretary Institute. Write as a association. This ISIN is coming, so please extend. That's what we have to write.
We have not got
September
any extensions.
Agreed. It is not extended.
Yes.
So we'll have to collectively say that it has to be extended.
Sir, next question is about the CSR1.
Yeah.
CSR1 is a one-time form,
Correct.
but most of the cases what happens is in NGOs, they've got
So
provisional.
just for a correction, CSR1 I did not talk. CSR1, every company who has to comply with CSR, that means have to spend, has to file annually a CSR1, which is supposed to be part of AOC4, but they have not been linking it, and 31st December is the last date for filing CSR1.
So CSR1 is for the NGOs, they have to file it before, saying that they have got 12A ATG registrations.
CSR2 that is. CSR2.
No, CSR1 is for the NGOs.
CSR1 is for NGOs,
Yes,
CSR2 is what I said, sir.
Yes. So CSR1s, it is actually time-based, I would say.
Correct.
But MC has not given any provision to amend or file the CSR1 again.
Yeah.
Because in some cases, what we have seen is the NGOs have got provisional registrations, but later after 3 years, it has got expired. So in this scenario, from the corporate perspective, how do we handle it?
No, I would be, as a corporate, I will ensure that all the registrations are perfect with that company, and then only I will associate with that. Otherwise, I am at risk, not they, as a company.
As a corporate, if they see the CSR1 form, that is already there.
Yeah.
But the 12A ATG registrations have got expired.
Sir? Namaskar. Sir, he says you have, no, he says the provisional registrations, the 10AB of the trust itself has got expired.
Right.
Now at that time when it is given, provisional registration means registration. At that stage it is registered.
Right.
So till it is regularized, it is considered as registered. So good to go.
So after 3 years, still the NGO will have the same CSR form, CSR1,
So
which gives
where
the
I'm saying,
eligibility to.
when in doubt, don't associate with such a firm.
Right.
Associate with standard firms only. Otherwise, you carry the risk. That's what I would say. Okay?
Thank you.
Shall
Thank
we
you. sir.
proceed? Yeah, these were the fines which I think, the fines, I don't know why they're called fine. It should be not fine. I mean, that's why they said they're not fine as far as the company is concerned. Non-filing form INC 20A, not mentioning company address in the letterhead. Okay? Not mentioning SIN number on the letterhead is a sin. Not opening separate bank accounts. EGM was not called for approving the issue of private placement. Not issued share certificates within 2 months from the date of allotment. I was talking about green deposits. The green deposits they say share capital, because for the purpose of issuing shares, I have to collect money. Money collecting from the point of, for share capital is also a deposit. If it is not allotted within 60 days. If the shares are allotted within 60 days, it becomes share capital. And therefore, till such time, it will be green. Beyond 60 days, if shares are not allotted, it could become a red deposit. So not filing BEN 2, MGT 14, incomplete disclosure of matters in the board's report. Non-dispatch of financial results to the members as per the provision. Non-appointment of internal auditor by the private limited company. I was talking about class companies, private limited also should have a internal auditor, section 138. Not appointing KMP, we talked about it. A big company like LinkedIn was penalized for not filing the SBO. SBO can easily be beyond the company's radar It is not only one time, but every time. Whenever the company, the shareholders change in the company has to find out who is the significant beneficial owner beyond the shareholder. For every shareholder, who is the significant beneficial. There are a lot of mathematics involved. In fact, we in the group, we looked into what the mathematics are to find out who is the significant beneficial owners. Plans are to put LLPs and companies on par in accounting. Accounting standards for LLPs are also set, and he used to be Core Public Limited. So how we have to see is both. I have to see from the profit share point of view, and also from the contribution point of view, and from the control point of view. So finding out SBO in the case of an LLP can be that much more tougher. So exemptions to private limited companies can either be through the act, through the rules, or through the ROD. ROD here stands for removal of difficulty. Okay, I mean that's a soft ROD in that sense. And there were two sections, section 462 and section 470. Section 470 was applicable, the last section in the Companies Act was applicable only for the first 5 years. That means 2018 it expired. Removal of difficulty in the first 5 years of the Companies Act coming into being for removing any difficulty in interpretation or etc. So 462 is a continuing provision for certain class of companies. If there are any difficulties that arises, the regulators can always change. The powers have been given to the ministry level. So that's how ISIN, we can still ask them to mend. So what are the privileges? Right to refuse registration of transfer, we talked about, minimum number of directors 2, quorum from general body, naturally, cannot be more than 2. Provisions not applicable to private limited companies, most important things I will tell is one is directors retiring by rotation. In a public limited company, every director not being an independent director shall retire once in 3 years. So 1/3 of the board should compulsorily retire. This provision is not applicable to a private limited company. Ceiling on overall managerial remuneration, section 197, is applicable only to public limited companies. As in the case of a public limited company, there is a specific reporting by the auditor within the audit report to say that the ceilings of 197 have been complied with. Not applicable to private limited companies. Report on AGM, disclosure on the performance and evaluation of the board, appointment of independent directors and women directors, constitution of audit committee and nomination and remuneration committee and stakeholders relationship committee, contract of employment with MD, whole-time directors to be maintained at the registered office. So these are not applicable to private limited companies. 462 has given certain relaxations. One is transactions with holding subsidiary and associates and fellow subsidiaries are not applicable to related party transactions, will not be considered. Kinds of share capital, rights issue, number of days are lesser. ESOP, ordinary resolution instead of special resolution for private limited companies. Restriction on power to buy its own shares. Acceptance of deposits. This is interesting. Section 73. I told you deposits can be accepted from directors, relatives of directors in a private limited company, can be accepted from the shareholders, can be accepted from the members by a private limited company up to 100% of the company's net worth. Net worth there means share capital plus security premium account, plus, I will talk about that. So there is a restriction. Accumulated profits are not to be considered for the purpose of finding out the net worth. All that I wanted to tell you is, I think I've told you in so many places, reserves and surplus is one word, but actually having two animals within that cage. Reserves is different and surplus is different. Surplus refers to accumulated profits, the P&L account balance, whatever comes for this year and from since inception. Reserves includes security premium, general reserve, or whatever. So what has to be considered for the purpose of arriving at the net worth for the purpose of deposits? When I'm saying in a private limited companies, I can take money up to 100% of my share capital plus reserves plus security premium account. I cannot touch my accumulated, consider accumulated profit for the purpose of arriving at the limit. So paid up capital plus free reserves plus SP stands for security premium account. Acceptance of deposit from shareholders permitted up to 100% by filing forms with ROC without complying any conditions. In unlimited amount, certain you can collect beyond 100% also. Look at this. You can collect, let us say my capital is 1 crore, my accumulated profit is 3 crores, and my other reserves is 1.5 crores. 1 crore, 3 crores, and 1.5 crores. How much money can I collect from my shareholders as deposits? Only 1 crore plus 1.5, 2.5 crores. I can take it from my members. However, I can collect 10 crores also if the following conditions are complied with. What are the following conditions in a private limited company? One is my shareholders, none of my shareholders should be body corporates. Point number 2, my borrowing should be less than 50 crores. And my borrowings to paid up capital ratio should be less than 2. So these are the conditions which have been told. Look into those conditions, then you can collect more than 100% also. General meeting provisions, filing of MGT 14 we talked about, audit of 20 companies. There is a ceiling in the Companies Act that an auditor cannot audit more than 20 companies. However, in the case of a private limited company, he can audit. This particular limit of 20 companies is not applicable. Not applicable to private companies with paid up capital of less than 100 crores or OPCs, dormant and small companies. Beware, there is a ceiling of 30 companies as far as the Institute's Code of Ethics is concerned, which has to be considered, excluding OPC and dormant companies. Additional relaxations, appointment of directors to be voted individually. Resolution has to be individually formed in the case of a public limited company, but in the case of a private limited company, it could be A and B are being appointed as directors in a company. The reason for directors to be appointed individually is I like A but not B. But if it is together, I may have to take it as a team and appoint them together. Restrictions on the powers of the board is not applicable. Interested directors can also be counted for quorum, and he can vote by revealing his interest. Loans to directors we talked. Loans to directors we already spoke about. Related party transactions. Private companies. What are the exemptions? If it is a one-person company, small company, dormant company, financial statements not to include, need not have a cash flow statement. Annual return need not be signed by a practicing company secretary. In the case of a small company, the annual return need not be signed by a practicing company secretary. Mandatory 4 board meetings. Every company, including a private company, should have minimum 4 board meetings. Whereas in the case of a these companies, small, dormant and startup companies, there can be only 2 board meetings, once in every 6 months with a gap of 90 days between the 2. For private companies, if and only if they are small companies, there are certain additional relaxations which we have already spoken about. So I may have to, maybe this I can take. What are the exemptions in the deposits? I talked about the 18 exemptions. 18 exemptions called the green deposits. Money which is taken from central government, state government, local authority. For any foreigner subject to compliance of FEMA. Loans or facilities from banks. Loans or facilities from public financial institutions. Commercial papers. Money taken from any other company. Directors or relatives of directors. Security application money within 60 days. Secured debentures and compulsorily convertible debentures. Money taken from an employee. Money taken from an employee up to 12 months salary. Up to 12 months salary is also green deposit. 11th is very interesting. Somebody talked about it. I think you mentioned about this. Non-interest bearing amount and held interest. So this is one gray area which can be used or misused also. If I am taking money from an outsider, if I am not paying interest and he says you hold it under trust, can it come under here? Is a possibility. Unsecured loan from promoters, if and only if stipulated by the banks. That means he is not a shareholder, not a director, but he is a promoter. And he has given the money to the company because the bank wants it as a margin money. So till such time the bank's loan is there, this can be subsisting beyond 100% or the limit. It can be there. But once the loan is repaid, this also has to be repaid. Accepted by a Nidhi company, any amount received in the course of or for the purpose of business, advance from customers up to 365 days, advance for immovable property, advance for long-term projects, chit subscription collective, 25 lakhs alternative investments. So small companies we have seen. When do we see it as a small company? This is a question. 4 crores, 40 crores. 4 crores turnover and 42 crores. Now in the year 2023-24, in the year 2023-24, my turnover was 35 crores. My paid up capital is 1 crore. But in 24-25, my turnover is now, let us say, 50 crores. In which year will I cease to be a small company? 24-25 also, unless the financials are done, I will not know. So only in the next year I will become a non-small company, because the end of the year I will come to know what my turnover is. So that is the point to be noted. Audit trail, I'll just talk about that. Please be very careful. I mean, I'm sure our audit reports, whatever we have signed, if the company did not have an audit trail, we should have qualified our audit report, so that at least next year the companies would have fallen in line to prepare to have their systems in place. Audit trail, very important, is not only for the main books, but for all the books of accounts, all the softwares that the company uses, including payroll software, including property, plant and equipment register, if it is coming through a software. Now, all those also, it is not only for Tally or ERP which the company is having, but for all software. It has a feature of recording audit trail. Audit trail facility operated throughout the year for all transactions recorded in the software. I mean, we have seen situations where the auditors have referred that the company has got audit trail for all except for property, plant and equipment and payroll. Okay, so be careful on that, so that at least next year the company will set it right. If you have given a clean report, the company will never set it right at all. And like what he said, in 1 year, you have now, that could be the issue there. You are not properly qualified and you will only put your feet in the pit. Audit trail feature has not been tampered with, and audit trail has been preserved by the company as per the statutory requirements for record retention. The fourth point is applicable from the current year onwards. Last year, the record retention of audit trail because the first year itself. So MSME, this is the disclosure that is required. So I will straight away go to the last slide. Of course, because the AC is put off, which means it should be end. The situation should come to an end. I can take questions. I like this one thing from the interview of Nitish Desai. Sir, the famous advocate, international advocate, there was an interview in the BCIG of November 24. There are two ways to be powerful. One, become bigger and bigger like the elephant who dominates, or two, become smaller and smaller like an atom, which is so powerful. Size does not matter, position matters. Don't worry too much about being big. Doing the right thing is what is important. Do the right thing. And second thing is balancing life or harmonizing work and life is very important to us. In our firm, I mean, he says, a renowned international advocate, in our firm, 80 to 90% of our people leave at 5:30 or 6 p.m. I hope my people from my office don't listen to this. Okay? A typical day starts at 9 a.m. This my office people have to listen. Okay? With 1 hour of continuing professional education. Everyone attends this, no exception. I attend too. From 10 a.m. for next 6 to 7 hours, we do billable work. Remaining hours are devoted to research. This is a great learning point. With this, I can take questions and thank the, thank the team Bangalore, Management Committee Bangalore, for giving me this wonderful opportunity of interacting and getting enriched with the elite audience of Bangalore members of our institute. And any questions, I am prepared to take. Yes, sir. Okay.
1,000 rupees is not utilized, it's more than 1 year. We don't have any other details except for the online transaction which has come.
You don't know who the customer is?
We just have a mobile number or email ID. It's more than 1 year.
You put it into CSR fund. That's my answer.
Okay.
I mean, just say that I don't know who it is. That means somebody I have to give, so I have. Maybe that is also a possibility. Of course, pay the GST. Yeah. Advance received for sale of plant and machinery, yeah. So it is a capital goods. They have not told what capital goods is. And for whom it is a capital goods is also not told. I mean, I always keep telling this. It may not, for a seller, I am manufacturing machineries, I am selling. For me, is it a capital good?
No.
For the other person who is buying, it's a capital good. I'm just telling. You are telling your property, plant and equipment itself is being sold. Definitely it is capital goods for you. I'm talking of another situation where I'm manufacturing machines and selling, AS manufacturing company. So for them, it is not a capital good. But what is told is capital goods. For any one of them, if it is a capital good, it is sufficient.
No, in my balance sheet, for me it is a plant and machinery. For me it is not a capital goods.
That's what I'm saying. It is from whose point of view is not told.
So we have to see other persons.
You see any one of them, if it is a capital good, it is sufficient, is the interpretation that I am giving.
And regarding this 11G,
yeah,
they have audit trail had introduced in between the year, and they have entered the transactions from the middle of the year, but all the transactions have been entered into that. Can we say that it has been, trial has been used for whole year?
No, you will have to say that audit trail has been in from 6th of August 2024.
But they have entered the earlier transactions
so
also.
That also will be known through the trail. So I would say that audit trail did not operate from 1st of April. What you are saying is from the middle of August, they started entering everything with the proper facility. That means you scrapped the old system and started the new system. I would say in that context also, from 1st of April, the audit trail till 6th of August, it was not there.
But it will be a penalization for the company.
If the auditor has not told, first to the auditor. Because all these are now the auditor is taken as a target more than the company.
Yes.
Okay, so definitely for the company, see, penalization can be there, but I would say as an auditor, I have to do what is right.
In case of bonus issue, so is this 194R which was introduced 2022 probably, so is it applicable for bonus issue which is done for a private limited company?
194R is for the benefits or perquisites, BP I call it, benefits or perquisites. I wish doctor was here. Benefits or perquisites received. This is not a benefit or a perquisite.
Seems like some interpretations.
Okay, I will give you, since you mentioned this, I will tell you, I will ask you a question, you answer, you will get the answer for that. In a ship, in a boat, there were 10 people, no room for 11th person. If the 11th person is there, the boat will sink, right? In that 10 person, middle of the boat, there was a pregnant woman in the 10th person. That pregnant woman now delivered. Will the boat sink?
No.
You got the answer?
Yeah.
Thank you.
Sir. So just another question. So are there any special considerations if the loan from directors, who is also a shareholder, is now converted into share capital equity?
So conversion of loans to equity, that is the question.
That's true.
Conversion of loans to equity, there have been certain issues. So what if the initial agreement itself is taken as a convertible loan, then it is better. Otherwise, I would say return and convert it. Or after camera, I will tell you how it is to be done.
Sir, it is in turn to audit trail.
Where are you?
Yeah,
Okay,
yes.
sir,
Sir.
yes.
So audit trail is compulsory for all companies. So many small companies will do the entry after the date only. In the audit trail, it will come date of entry, but my date of voucher will be different. As sir is told, he started to enter from the August. I started to enter from the August, dating April. But in the Companies Act, he will tell auditor has to ensure whether the audit trail is there or not.
Perfect.
But it will not say it had been entered on a different date or it tampered it or something like that. If it is tampered, then only. Otherwise, why should I have to qualify?
That's perfect.
Not
perfect. Like that is the point. See, by looking into your case, sir, where you said from 6th of August, I'm using the word 6th of August for a purpose. Prasanna will know that. That's my birthday. I'm just said. So the point I'm saying is, if it is from that date and you have entered from that, the audit trail will show that that transaction was entered from this date. That is what is the purpose of that. Books were not regularly updated. That is what comes to the knowledge by having such a feature. That is why it should have been there throughout the year.
There is no need to qualify the report or something like that for that reason.
No, point is, did you say that audit trail was not there?
No. Audit trail is there because of dates, whether I have to qualify.
Not required. Not required. Not required. Okay. Yes, sir. Last question, I suppose. Pramod ji, last question, or I'll go on till you.
So like you said, like audit trail for even all the other softwares also required.
Yeah.
So I'm using a payroll only in Excel.
Yeah. Yeah, that's a question. Whether whether that particular Excel is a software, it's a spreadsheet. You just use it as a calculator. The primary entry happened in the books. Then it is fine. What is told, our institute has come out with an implementation guide also to say what is a software, what is a spreadsheet. If the spreadsheet acts as a software, there could be situations, I don't know. You should ask Bharat yesterday who spoke. Now you should ask him whether that is a thing. If that acts as a software where the information automatically flows and that becomes the primary database, then even for that you should have is what the institute has told in the implementation guide. So the point I am always saying is, from my common sense, is if you are using it as a calculator, then calculatorically you don't have an audit trail.
So similar, I'm using software, but I extract the data from it and manually enter into the system.
No, then all the primary data is there, right? Primary data is there.
That is there in the Excel also.
No, that is why they say that even for Excel you should have an audit trail.
Okay.
I don't know whether it is possible to have an audit trail in Excel. Any one of the juniors here should tell me. But any one of the primary data being there, whether you are manually feeding it, I would say manually feeding it is a wrong thing. It should have a patch. That's how we talk in the IT committee, saying that nothing should be manually fed from one software to another software. Having said that, if the primary data is there, it should have an audit trail. Okay. Thank you so much, Pramod and Team Bangalore, for this wonderful approach.
Thank you, sir, for that knowledge enriching session. May I request CA Pramod Aregde, Chairman of Bangalore branch, to give a memento to sir. Thank you, Pramod. We will assemble back after lunch at sharp 2:30. Thank you.